Good morning. We're clicking through October. On the latter part of the month, we had stronger closes in corn up 9 cents, soybeans up 13, a pretty good week, especially considering we're right in the midst of harvest, basically the tail end of soybeans, but probably, around 65% harvested on corn. Chicago Board of Trade wheat up 5 cents. Minneapolis, the only detractor there, down 3 cents for the week. The live cattle down 70 cents and feeder cattle down $4.20 for the week. And actually forming a downside weekly reversal, feeder cattle closing limit down on Friday, and fat cattle not closing limit, but also, running to a new all-time 6,000 year high this week, but closing lower. That's a bad sign, actually, technically, on the weekly chart. However, the daily chart looks even worse in gold and silver, who had significant downside reversals. Gold down $91 on Friday after being $100 higher earlier in the day, and silver down like 3 points. But for the week, for the weekly price, we had maybe a blow off top this week because gold actually finished up $213 for the week, a huge gain for the week. Went to new all-time 6,000 year highs, but what kind of price action we had in gold and silver, the precious metals. Of course, I've been very excited about this because gold and silver, if they, a lot of times some commodities will blow off and run sharply higher, doubling in price like gold has done. And that's a precursor for the other commodities. I'm talking corn, soybeans, wheat, uh, and even the cattle. The cattle have also gone to new all-time highs, almost doubling their previous prices, downside reversals this week. So the question is, have all of these commodities, the cattle, the gold and silver, precious metals, blown off tops, and now the attention from the funds is going to go into other commodities like grains or other commodities as well. So crude oil down $1.33 for the week, but I'm really interested in getting into the charts. I pretty much only have charts this week. Of course, there's a government shutdown. The uh, the buyers of commodities, the grain merchants, say a shutdown is bearish. I think it's exactly the opposite. The less information the buyers of grain have, the more bullish it is. Of course, the grain has to go from the weak hands of farmers into the strong hands, either the merchants or the better marketers of farmers. So, and then the markets can go sharply higher, which typically happens. So here we are in corn. It looks like we bottomed the corn early. We've got a higher low, and we're running these markets, a little bit higher. Corn had a good week this week, so it looks positive here. We're 60% harvested in corn or more, and so it's likely that corn is not going to go back down to those old lows. Soybeans, it gains this week as well, but you've got actually higher lows here established, a pretty nice slow uptrend. I think the bottom is made in soybeans. Actually, it was made in soybeans way back here early in the year in January. So it certainly appears to me that soybeans maybe is turning the corner first. As soon as we get any kind of trade deal with China, these soybeans could be off to the races. But we've formed our bottom in 2025, and I think now we're headed higher over the next 2 or 3 years in the grains. This will be very interesting to watch. The wheat market even closed higher for the week. After making new lows this week in Chicago, only up 3 cents. The wheat is the weak sister in these three major commodities. And spring wheat, of course, making new lows this week. It hasn't even shown any strength yet. Look at this crude oil. Crude oil has crumbled lower again. We are near the yearly low at $56. This is probably a good place to buy your energy needs. Certainly buy up some energy needs. You could start purchasing those things certainly at the yearly lows, especially if these commodities are all going to go higher. Actually, in terms of gold, these commodities are at an all-time historic low and valued in terms of gold. Not these are valued in dollars, but gold is worth twice as much as it was a year and a half ago in dollars. So Think about that. Prices of all these other commodities have halved if you value it in terms of gold. And here is that gold market. What a blow off market top, an acceleration of the gain. And now we have a huge downside reversal, a $200 range on trade on Friday. And it appears that it's possible the gold market has topped. Although we gained 200 bucks for the week, we'll have to see how the early price action is next week. But the gold market should drop precipitously. Do you remember back in about a year and a half ago, gold broke above $2,100? I should have showed these weekly charts, but I said at the time, close your eyes and buy new highs. If anybody of you guys who remember that, we have now doubled the gold price. Our target was $4,200. We actually went beyond that to $4,400 before we topped the gold market. And is it even a top? Many people think gold can go much higher. We have in the past tripled the price of gold from its previous high once it broke out. So there is a possibility that gold is not done yet. And then you look at the silver market, or excuse me, I guess this is the live cattle. The silver market is actually similar to gold. It went back to the 2011 highs of $50 and above it, but reversed lower as well. Live cattle, though, we had a push lower on Friday, much like the gold and silver market, but not nearly as impressive. It didn't do a downside reversal. If you look back at gold here, you've got a downside reversal in that you went to a new high and reversed and closed below the previous day's low. So that is a much more impressive daily downside reversal. In cattle, you did not do that in the live cattle. You just kind of went lower to start the day, and feeder cattle actually gapped lower because we closed limit down, but the synthetics were not much more down than the futures. So we'll have to see how the market trades. I kind of suspect that maybe the cattle market has not topped, but it certainly could have. The problem with cattle is you've got a downside weekly reversal, not a daily reversal like in gold and silver. And gold and silver did not reverse on the weekly charts yet. So that'll probably get reconciled next week. But certainly we don't have the kind of move. They're not similar. They're similar markets, and they've both gone to do all-time historic highs, but they're not similar in the price action that we had on Friday. Gold and silver forming downside daily reversals, and cattle not doing that, but cattle forming a weekly downside reversal, which maybe is even more damaging. Sometimes on a longer term basis, the weekly is a better chart to trade. So that would argue then that we've formed a top in cattle, but just a temporary top in gold and silver, and maybe the price action next week will determine that. But what's really exciting, of course, for grain producers especially, grains look like they bottomed. We've gone down for 3 years, and we're bottoming the market basically in the year 2025. Sometimes bottoms take months or even a whole year. And I think that's what we've done in 2025. We're bottoming the grain markets after 3 years of going down. And now we can go higher in 2026 and 2027 and 2028, actually. And I would not be surprised if corn is over $6, maybe even 7 or 8 by the end of that 3-year period. Soybeans at $15, $16, $17. And wheat over $10. I think that's possible. Of course, it's a long, slow climb from where we are, and it looks like soybeans are going to lead that climb higher. But we obviously have to do some things. Now, President Trump met with Zelensky, talked with Putin the day before we saw this Ukraine war, write a trade agreement with China, we are still on pace to meet President Xi and President Trump in a couple of weeks, no matter what all the BS press has said. Trump himself posted, though, I don't know any reason why we should meet with him. It's, posturing for that meeting, of course, but the press blew that, the fake news blew that all out of proportion. So it's interesting. We'll have to see what happens next week, but certainly there are great implications for cattle producers here, because it's probably a time where you at least want to put some put options on protect yourself because this is a possibility that the markets have finally topped. If you have a great weekend and good marketing.